Welcome to this week's edition of 3 Question Thursday, where I answer 3 good questions that were asked to me in the comment section in the last week. So let's get started. The first question that I have is, if parents are given power of attorney to collect rent from an NRI's property, does it mean that the income will fall under parents' income in India, or does it fall under NRI's income for taxation? So this is a good question. And see, when parents are given power of attorney to, let's say, collect your rent or let's say sign on your behalf, it doesn't transfer any kind of ownership. It is mainly just for transactional purposes. So for example, the rental income is taxable only in the hands of the property owner and not in your parents' PAN card. If the property belongs to an NRI, and even if it is collected by parent or anybody who has the POA, it will not be considered their personal income. It will only be considered as owner's income. See, the role of power of attorney is merely to authorize any kind of transactions related to that property. It doesn't give you any kind of ownership on the income or any kind of tax liability. One thing that I've noticed is in most cases, the NRI owners don't actually disclose that they are NRIs to the tenants, and the tenant doesn't deduct enough amount of TDS. So this creates problem for both the entities, for the tenant as well for not deducting the TDS, and then again for NRI landlord, regardless whether the payment is directly made for them or into the POA's bank account. So the NRI must declare this rental income as part of their ITR-2. They have to file an ITR-2 form. So it comes under the head called as income from house property. So that is where you should be declaring it and then pay your taxes accordingly. The second question that we have for today is, I moved to India in April 2025 after my company transferred me to its Indian subsidiary. I earn my salary from Indian unit but requested part of it from the parent company in Abu Dhabi, where it will be tax free. Do I need to report this salary in my Indian tax return, and are there any other compliance requirements? See, first of all, if you are residing in India for more than 182 days, then you become an Indian tax resident. If you are residing outside of India for more than 180 days, you become an NRI. Or let's say you were working in Abu Dhabi for more than at least 7-8 years, then you might be eligible for RNOR tax status. Now, if you are an Indian resident, doesn't matter whether you take salary here or whether you take in your Abu Dhabi bank account, it will still be taxed in India. And when you become an NRI, you only have to pay taxes in India on the salary portion which is received in India, not on the salary portion which is received outside. But if you are in an RNOR, that is where things get tricky. So as long as you remain in an RNOR, you won't need to directly pay taxes on your foreign salary income, the portion which is coming in your Abu Dhabi bank account. But that is only till the RNOR status is valid. Once that vanishes, all your income starts becoming taxable in India. So I hope that answers the question, and make sure that this salary or this income is declared in the Schedule FA, where you declare your financial assets abroad and financial income. So we have question number 3, which is, I am an Indian born person holding British passport, retired now and living in India. I have sold flat in India and paid Indian tax on the gain. Do I need to pay tax in UK as well? Now see, from a taxation perspective, it doesn't matter where your citizenship lies. If the property or the asset was here in India and it is sold in India, the taxation will arise in India. Regardless of your citizenship, what matters to Indian tax authorities is what is your tax residency status. And similarly, the same applies for UK also. UK is going to see what is your tax residency status. So for example, even if you are a UK citizen, you come back to India, you sell a property here, India has the right to tax the gains. Even if you are a UK citizen, UK will only tax your income if you are a UK tax resident. If you are not a UK tax resident anymore, it won't tax you on your global income. So you have to see where the capital gain is arising, and that country will have the first right to tax. And then you'll also have to see whether you can take DTAA benefits and claim some relief out of it. But in your case, India has the first right to tax, and because it is UK not US, it is very simple for you. You don't have to declare or pay anything in UK. So I hope that solves your question, and thank you so much for watching this quick video. If you have any questions, please post them in the comment section below, and I would want to take them in my upcoming videos. Thank you, and join my NRI only WhatsApp community, for which the link is in the description below. I'll see you in the next.